Bad news. And more bad news. Our enterprises do not understand terms like opportunity costs, average collection cycles, liquidity ratios, and the list. Despite this lack of basic financial management skills, they can survive in good times. But to stay afloat in more challenging times ahead, will require some basic financial management skills and a real-time information system. You will need a radar to detect early signs of dangers. Management needs to become more agile and develop better responses to challenges. Now don't get nervous. We are not asking you to hire a full-time accountant and beef up your team with professional managers. But you must learn to cut costs without cutting corners. Do less, pay less, better results at lower costs. And Thea Club helps you achieve all these, save costs on outsourcing. Cut time lost in partial accounting. Enjoy our services at preferential rates. Why waste time on partial accounting when you can get full sets accounts in one quick and easy step? You save at least 12 hours a week, which adds up to over 500 man-hours every year. Assuming hourly rate of $10, you will save over $5,000 every year. That's a fair bit, isn't it? Many smaller enterprises that are outsourcing their accounts have to use their own internal resources to keep partial accounts in Excel. Hence, they incur a hidden cost in excess of $5,000 each year. With Thea Accounting, you cut hidden costs because it gives you full set accounts without an accountant. This means that you enjoy real-time management information every day. It also means you save money on outsourcing. On the average, smaller enterprises pay $300 a month. That is $3,600 annually. Yes, you can save another $3,600 on outsourcing of your accounts. Add that to what you save on partial accounting chores, and you get a total savings of $8,600 plus the benefits of proper full set accounting. How valuable is full set accounting? Absolutely priceless. You can avoid costly mistakes with a good financial management tool that comes with the Car Report. In good times, you do not need much financial management skills. But in bad times, you need a reliable radar device to navigate safely through treacherous water. Welcome back. Pay attention to the exciting part coming up. The Car Report. Standard accounting system stops at the P&L and balance sheet, profit and loss statement, and balance sheet. Only Thea System gives you the key accounting ratios report. The Car Report. Without a full-time accountant, smaller enterprises are deprived of these numbers to empower decisions in more challenging times. Anyone can cruise through calm waters, but everyone will need special survival skills to ride the stormy seas. The captain must familiarize himself with the radar system and use it to steer clear of dangers and hidden obstacles beneath the treacherous waters. The Car Report functions like a radar. It highlights management to key sensitivity factors, such as sales turnover to date, average monthly turnover, average daily turnover. It shows gross margins %, as well as gross profit in dollar value. Such info alerts management if sales is falling below break-even point. Car Report warns you if sales is falling below break-even. You can then take timely action to avoid a loss-making situation. The Car Report also shows the sales trend over the last 3 months. Is it a flat trend? Is sales going upwards? Or is it a downward trend, with sales heading southwards? Without a Car Report, managing your business becomes precarious and dependent on guesswork. Problems often go undetected until it is too late. So why not wise up and switch over to Thea System now and enjoy instant savings, full set accounting, and real-time management information. No need to pay for costly backlog accounting services every year-end. No need to pay for monthly outsourcing and late accounts. No more hidden costs in keeping partial accounts. Imagine all these savings. And costly mistakes in decision can be avoided with timely and accurate information. As a Thea user, you also enjoy ongoing support and services provided by Thea Club at a discounted rate. For example, tax compilation at $988. Usual price, $1,888. You guard against penalty and fines for late tax submission. No more worries about tax compilation and ACRA annual returns. Save, save, save. Thea gives you full set accounts which is ready for tax compilation. You need not spend additional money on backlog accounting. And unlike your accounting expenses, which is only allowed a 100% tax deduction, your investment in the Thea system will qualify for a 400% deduction. Thea will continue to give you substantial savings plus the benefit real-time management information for a lifetime. Ask our consultants for further assistance. Do not miss this rare opportunity to slash costs. Pay less, do less, and get more with Thea. Call 633-62575 or 633-94998 today. Thea is awesome. Full set accounts with one quick step. Easier than partial accounting. Very much less tedious. Cuts down hidden costs. Frees up productive resources.
No standard accounting system out there has got this feature. KAR stands for Key Accounting Ratio Report. Let's take a quick peek at the Liquidity Status Report. What do you see? Well, probably three numbers that says current assets, current liabilities, and liquidity ratio. Do you make sense of this? Do you know what is liquidity ratio? And do you know why it is important? If you don't, it is perfectly normal. You are not alone in this because financial management is an area that is seriously neglected by entrepreneurs who do not have the basic training in financial management. They simply cannot see this, which is why even very successful companies went bust, even though the business is good but financial management is poor. They work themselves to a position where they don't have enough working capital. Cash is king in business. You can run into serious problems the moment you run out of cash and working capital. So this liquidity ratio means your current assets exceed your current liability by over 2 times. To be exact, 2.38 times. Does it make sense to you? This is the ratio of current assets and current liabilities. But what are current assets? What are current liabilities? If you don't know the answer, you better start to know the meaning of these two terms. Current assets are liquid assets, which are assets that are already in cash or convertible to cash within a very short time. It takes the form of debtors, customers who owe you money, which is a paper asset that is convertible to cash. It can also be in the form of stocks convertible to cash. Next, we talk about current liabilities, which by now you should have guessed that it is something that you are due to make payment for within 12 months. So, on one hand, you have got your current assets. On the other hand, you have got your current liabilities. In this case, your current assets are more than your current liabilities. It means that you are very well placed. You have good working capital. Now, what is working capital? I have already given you a rough idea. All you need to do is click on this working capital report to get a much clearer picture. In this case, you can see that you have got trade debtors, customers owing you money about $71,000, some petty cash of $800, bank account of $329,000, and cash sales float. Now, here you have money owing to the director, $132,000, and intercompany account, provision for taxation, goods and services tax, paid on the total basis. So if you add up all your current liabilities, it gives you this amount of $169,000. Subtract that from the $401,000, which is your current assets. Then you have working capital of $232,000. So this working capital now gives you a clearer picture than just the liquidity ratio. So do you agree that such ratio and reports are important to every business? So that they do not run their business day-to-day blindly and precariously without understanding what is working capital. No other accounting program can give you reports like this, which is why we urge you to make your upgrade now. Put yourself in better control. Empower your managers to make more informed decisions with TradPack Enhanced IAF version. Now let's move on to what the KAR report, or Key Accounting Ratio Report, as mentioned earlier. It's a very comprehensive report that will give you a very good feel of your business. So let's put in the period starting from the 1st of November 2014 to the current date. Now this report will tell you for the period specified your total sales turnover, your gross margin, and your gross margin percentage. Now, would you agree this is very useful information? Then it goes on to tell you about your sales turnover at daily monthly intervals. You can see on the average you are doing $143,000 monthly and $4,779 daily. This is really useful information that will allow you to make informed decisions. But that is not all. The CAR report, or Key Accounting Ratio Report, is something you will find amiss in any ordinary accounting system. This is alien to smaller enterprises that do not have a full-time accountant to derive these figures from the P&L and the balance sheet for them. And even if you do have a full-time accountant, often you will find that accountants don't even have the time to do up this report for you manually.